Good morning, good afternoon, and good evening, depending where you are on the planet. And welcome to the Tuesday, 4th of January, 2022, the first webinar of 2022 for TradeDay.com with Steve Miley here on the call. So, welcome everyone. I'm going to wish you, before we even start, a great trading year. Exciting things happening here at TradeDay.com. We're adding more content, continuously adding more content to the education sections in here. We have this content that we added at the end of last year, these trader quick tips in here regarding navigating the site, logging into the trading platform, looking at the month to trade, looking for the right contract code, trading hours, and then looking at trading from the chart, order tickets, lots of different exciting stuff in here to help you on your journey to become a better trader and take the evaluation challenge and get funded for your trading, for your personal trading by us at TradeDay.com. So a quick note of housekeeping before we really get into it. Although this is the first webinar of 2022, unfortunately, there won't be a webinar tomorrow. We're unable to deliver a webinar tomorrow on Wednesday, 5th of January, but then normal service will return with our daily webinars from Thursday the 6th, and then obviously into Friday, and then beyond for the rest of the month. But this is the first webinar of the year, but we will not be hosting a webinar on Wednesday the 5th of January, so just a bit of housekeeping there. But do come and take a look at these trader quick tips. Do take a look at all our wonderful courses that we have, our introductory courses in here, whether it's on futures contracts, setting up your trading desk, getting ready to trade, technical analysis, fundamentals, risk management, psychology. There's loads of good stuff in here on the educational part of the platform. So do please take some time, look around the platform in here. If you're on the 14-day free trial, or if you're one of our traders taking the evaluation challenge, or if you're just looking around the site in here at the moment, please do take a look at the various resources on offer in here in our courses section. Okay, moving on to what we've got going on right here, right now. Well, let's take a look first of all at the economic calendar. So for today, we've already had in here the German unemployment data, slightly better than anticipated in here on the German unemployment change in here. We've also had manufacturing PMI data from the UK, slightly better than expected there. And then later on this afternoon, the key data for today is going to be from the US at 10 a.m. in here, Eastern time. And that is going to be the ISM manufacturing PMI data. So we're going to be certainly keeping an eye on that later today. The other thing to note is we also have an OPEC meeting today. So a couple of little articles just mentioning that up here. Heads up, meeting to begin later at 1300 GMT. So that's when the meeting is due to kick off. Probably going to get something later on this afternoon, European time, probably around lunchtime in the US. So we're looking for something to come out of OPEC Plus in here. And then the basic expectation in here, if you go and take a look at this article from CNBC, expected to stick to planned oil output hike. So they're going to increase oil output as Omicron COVID cases soar. So obviously trying to increase that supply in here to maybe keep on a lid on the price, because as we know, the oil price has been pushing significantly higher throughout 2021 and remains strong, was strong at the end of last year. So looking for them to kind of keep that a little bit under control in here, because obviously there's a lot of concerns, and we've discussed this in the webinars that we looked at through November, December. Last year, there's a lot of concern about inflationary pressures from commodities, inflationary pressures because there's a very tight labour market, and obviously inflationary pressures from the oil price and energy prices overall, particularly European gas prices, European electricity prices have been surging in here through the late part of 2021. Although going into the very end of the year, we did see a significant pullback, but a pullback from exceptionally high prices for gas prices and for energy, electricity prices in Europe. So so those inflationary concerns. So obviously OPEC Plus looking to keep a lid maybe slightly, and also concerns around Russia, Ukraine in here. That's kind of kept the saber rattling that we have going on the Ukraine-Russia border in here is keeping oil prices elevated. So potentially looking for for OPEC Plus to try and calm the fears of an even higher oil price in here by keeping to the planned oil output increases that they have already kind of the expectation. So OPEC Plus has raised its output target each month since August by 400,000 barrels per day, and it's expected to stick to this policy for February. So we're going to get that a bit later on today, and that meeting due to start very shortly, actually, 1 o'clock GMT, which is only in just over 20 minutes time. Going back to the calendar in here. So looking through for the rest of the week. Normally I do a run through for the whole week on a Monday. We didn't have a webinar yesterday. So we're going to do the run through for the week in here to give us an idea of, even though, Trade Day, we are a day trading platform. We're looking for you to profit from day trading and to go through the evaluation challenge from a day trade perspective. Certainly, even for a day trade, it's important to have an understanding of the shape of the week, as I like to call it, where the main data points are, where the main fundamental macroeconomic events are through the week, because depending if we have a lot of obviously potential volatility towards the second part of the week, maybe because we've got we have significant data or events coming up, then it's more likely to make maybe the early part of the week less volatile if we have less data. So let's take a look at the rest of the week. As I say, we've got OPEC Plus today and the ISM data at 10 o'clock Eastern, which is 9 o'clock Central Time, and then 3 o'clock this afternoon GMT. Those are the main points for today. Going into tomorrow, we have the service PMI data coming out from market for global. So we get that from Europe, obviously Asia overnight. We get Europe through tomorrow morning, on Wednesday morning. We get, remember, it's employment week this week for the US. We'll come to that for Friday, but precursor to that is the ADP, the guesstimate of what the number's going to be on Friday. So we had the ADP non-farm employment change data on Wednesday out of the US, and say that service sector and composite data in here from market for European PMIs through the morning session in here in Europe, and then we get the market data from the US. Also on Wednesday, crude oil inventory data, and then also Fed meeting minutes, from that last meeting we had at the end of the last year, where they confirmed that we were going to go to a more aggressive tapering. And so it's going to be interesting to see what the discussions around that tapering, what the discussions were around the potential rate hikes that we are expecting to come through in 2022. And then we also get Chinese and Asian service PMI later on Wednesday, late Wednesday evening, US time. And then moving forward into Thursday, jobless claims data is fairly light on the. We get the composite and service sector PMI from the UK. UK data is day behind in here because we had an extra day's holiday yesterday on Monday in the UK. And then we get jobless claims data from the US, and then we get the ISM data out of the more important, more watched than the market data on the US side. And the market data, the market PMI data, PMI, remember, Purchasing Managers Index, purchasing managers, those guys and gals looking up and down the supply chain. It's very important data, very forward-looking data. That's why it's so watched so much. In my career, when I was at Credit Suisse as a research analyst at Credit Suisse, we designed a whole set of measures called risk appetite measures that we had primarily based on the PMI data, because the back history of that was that it was a very good lead indicator to what was going to happen to national and global economies as a good lead indicator for 1, 2, 3 months down the line. So certainly going to be watching out for this PMI data. And as I say, the market market PMI data is more watched on the global basis. And although they do produce the US data, the ISM, the Institute of Supply Management, US data is more watched. So we have that coming up on Thursday. So certainly watching out for that on Thursday. And then running into the end of the week, we do have some inflation data from Europe, and retail sales data out of Europe. But really, all the focus is going to be on the Friday jobs report from the US, and we also get the Canadian jobs report at the same time as well. So a busy week to kick us off for 2022. Employment data later this week from the US. We have the ADP precursor data on Wednesday. We also get the Fed on Wednesday. And because of the different holiday structure we saw over New Year, we have the various PMI data coming out. We've already had some out today. We have further data coming out Tuesday through Wednesday through Thursday as well. So watching out for all that market and ISM manufacturing and service sector and composite data that we have coming out. So a busy week on the data front, so watching for all of that. Now, we've had a really strong start to the year. It was a fairly firm close to the year. So global economy in here, factories take Omicron risk in this way. So this is pointing to that manufacturing PMI data that we've had out of Asia and Europe in here, Eurozone in here, UK and China. They're mentioning in here PMI data, all looking very positive in here, despite the Omicron issues from the COVID-19 new variant that we have. And the market's very much taken the new variant. There were some concerns, obviously, back in December, but the market now, there's kind of a realization, a lot of information coming through that the Omicron variant, not as severe as the Delta variant. So that's seen as obviously a positive. Fewer hospitalizations, fewer deaths coming through from the Omicron variant, although it's obviously impacting on the workforce. And there are restrictions in various countries in Europe, UK, and to a lesser extent in the US. But nevertheless, the global economy weathering the storm fairly well through this new variant, and that was reflected, yesterday with a great start to the year. So World shares stretch positive start to 2022. All these kind of headlines in here. World shares gain steam in bright 2022 openings, and this is kind of recapping, Euro stocks. So it's not just the US in here. Euro stocks, travel and leisure stocks are doing well as well, despite the concerns around Omicron. The travel and leisure centre doing well. Futures extend positive start. So futures markets in the UK, the Europe and the US looking strong in here. US futures, Europe stocks gain, and also the yen 2017 low in here, and they picked that up on here on Forex Live. Dollar yen moving towards the 116 level in here, strengthening in the dollar versus the yen, echoing a weak yen. Remember, the yen is seen as a safe haven currency. So we're very much in risk on mode in here at the moment. Stocks flying high. And one of the big drivers actually that we had, or the more recent drivers, has been Tesla. So Tesla put out some amazing numbers in here a couple of days ago, and the stock reacted very positively to that yesterday. A huge leap in Tesla shares in here. A little explainer article in here, up 13% on Monday, yesterday, Tesla shares, and it boosted its deliveries 87% to a record level in 2021. So Tesla shares doing particularly well and driving up the tech sector and helping Europeans and US stocks significantly higher. And Apple in here hit the $3 trillion market value in here, and then did pull back from that, but first company to hit a market value of $3 trillion yesterday. But so a lot of strength in here across the tech sector, a lot broader strength as well across the leisure sectors as well. So you're seeing the markets very much in risk on mode, and that echoed by that strength in dollar yen, that weakness in the yen. One thing, good article here I saw on Forex Live, great site in here of independent analysts, just pointing a bit, doing a bit of technical analysis in here. You've got this is the let's just pop this out actually. So you've got the US Treasury 10-year yield in here, and you see we've got this kind of triangle / wedge pattern, whichever you want to call it, but nevertheless it's definitely a kind of a consolidation. You've got this strong this uptrend line which is up, pointing to higher yield, so it's bearish for bond prices in here, and you can see the market moving back towards higher yield levels that we saw last year, and also you've got this kind of this trend line running across here, and it's moving up towards challenging that trend line. So a break above like 165 in yield for the US 10-year, and then certainly the peak from last year is at 175 will then signal a breakout, which would put 10-year yield significantly higher. It'd be interesting to see how then stock indices react to that, and also the dollar as well. Let's take a look at a few charts in here. Kind of covered most of this stuff up here already. Dollar yen we've already mentioned, staying strong, and here, and then OPEC meeting we've mentioned as well, and we've discussed all of that. Let's take a look at a few of the charts. So there's the S&P 500. Not a lot to say really. A really strong rally in here. Santa rally was a bit late for the Santa rally. It's actually between Christmas and New Year. We had a really strong surge back to a new all-time high, and another new all-time high for the S&P 500, and not quite the strength, but strong as well. Nasdaq in here rallying through the holiday season, didn't quite make it in here back up to the peak that we saw back. This was just around Thanksgiving in here, but not quite there. We did dip into the very end of the year, but then a strong rebound yesterday, helped higher yesterday by Tesla, and off to a positive start in here today. I think there's real risk, we get the Nasdaq play a little bit of catch up in here with the S&P, and also the Dow closing an all-time high yesterday. So maybe we're going to get a little bit of catch up on the top side in here for the equity markets. Quick look at the treasury market in here, and that's that kind of lower prices what we talked about. Lower price, remember, equals higher yield that we just looked at on this chart in here. Where are the bond market? So this pushing back towards more recent high yields in here on bonds, which is equal to lower prices. And we go back in here, so you can see we're getting very close to, again, this was around Thanksgiving, back towards these lows that we saw in Thanksgiving. So real potential in here for to break down through those lows in here and have a more significant push lower on the 10-year note. And let's a quick look at the dollar. The dollar staying strong. Remember, lower prices, bond prices over here, lower bond prices equaling higher, lower bond prices equals higher yields that we just looked at. Higher yields good for the dollar in here. So the dollar rallying as well in here over the past. Been kind of caught in a range, really. The dollar index is the dollar index future. Caught in a range, but did come down to this low again in here just after Thanksgiving. Got down towards this low in here that we had at the very end of November. Held that low over the past 24, 48 hours at the end of last year and beginning of this year, and a really strong rebound yesterday, and strong again higher in here. Dollar yen obviously pushing higher, and the dollar generally broadly strong in here as we begin 2022. I'm just going to pop this out in here so you can just see this a little better in here. Let's go and take a look at a couple of other markets I know you guys look at. So oil in here. Oil kind of in this kind of choppy range in here for much of the second half of last year. This broader range here from the summer, chopping in that range. And I'd argue now, we did get a significant sell-off, but I think it was a strong rebound in here from the middle of December. It kind of held some supports in here around the 117.50, 60.50 area, and rebounded from there in the middle of December, and it was a strong rebound right into the end of the year. Now it was a fairly poor start to the year yesterday. And that dollar, if we go back to the dollar index in here, the dollar strength in here over the past 36 hours from yesterday and through today, obviously not helping go. Remember, there's that inverse relationship in here between, let's go back to the daily, the inverse relationship. So gold between the dollar and gold. But, but I think the underlying change. So I think in here, if gold can hold in, but above the lows in here from this morning. So we've got the low in here on the March contract is, let me just get this in here. So the low here for today is at 1798.1. Yesterday 1798.2, and you got this little impulse though. See this in here? This was from the 30th. This little low in here. And if I go across, actually, I'm going to just go across to this tab in here. So you can see this low in here, this swing low in here. So the market's kind of defending that one. And then also this low across here, this low here. Okay, so we're defending this low in here. This is the one that I was looking at here, this swing low on the 30th. This one here, see this here on this impulsive candlestick from the 30th. If I go back to the 30-minute chart, that's this swing here. Okay, and that low there was at, I can't Let's see in here in the box. Let me just move that. So this is 1796.2, and we've held in here twice at 1798.2, 98.1. I think whilst holding this area, somewhere between 1798 and 1796, I'd be kind of looking to buy gold for a push back up, into the range at least from yesterday. But it is very much in a range environment. I think, yesterday was more a reaction to the beginning of the year and to the dollar. But the underlying theme in here, if I zoom out a little bit, I still think we've got this kind of underlying bigger kind of erratic uptrend in here for gold. It's very erratic. That's the problem in here. It's going to be difficult to trade. But whilst holding 1798.96, I think the risk is back up into here, maybe towards, not going to get back all of what we lost yesterday, but maybe back up towards like the 1810 to 1815 kind of area for gold. Quick note to oil. Now be careful with oil, obviously, in here going into today, because we've got the OPEC Plus meeting. But you can see in here a strong, having had significant sell-off in here through November, kind of got this, a double top pattern going. We looked at this last year, reversed the trend line, significant sell-off in here at the end of November, and then the market managed to rebound, and then big retest and a big rebound. And again, when we went back into risk on between Christmas and New Year, this part of the chart now mirroring the stock market. If you look, we had the strong rally. If I just jump from here back to the S&P on the daily chart, make this one bigger, so you can see this kind of sell-off in here into Christmas, and then the strong rebound between Christmas and New Year, then consolidating and then back higher. And if we go and then go back to the oil chart, we're kind of seeing a similar thing in here. So where are we? There's the sell-off kind of into Christmas, and then a strong rebound in here between Christmas and New Year, and then marking time, and then a dip yesterday. We had a significant dip yesterday, and then a strong rebound. You've seen the market rebounding right off in here. I've got my favorite 13-period exponential moving average on, come right off that 13-period exponential moving average, a strong rebound in here, and then kind of marking time. Not surprisingly, today it's not going to make a new high ahead of OPEC, but I mean, just from the technicals, and it's difficult to trade for an event like this, but I'd prefer to be long with a very tight stop on oil. This thing could shoot up. Who knows? There may be a larger increase in supply, which should obviously be negative for oil. So you do have to watch out for that. But if the market delivers what we're expected, I think what's expected. Then if OPEC Plus delivered what the market's expecting anyway, I think all the risk is higher for oil. And we could easily see we failed at this impulse point. So from the 26th of November, the high there 77.59, and we've been up to 70. What's the high there? 77.44. So we found at this impulse point from November, where we had this big sell-off in November. So I think we could clear through there, and then that could open up, up back towards 80 in the next 24 to 48 hours. So I'm tentatively long. If we go to a 30-minute chart, I'd be tentatively long on oil if it goes, in here. So you can see the market. You could have a really tight stop in here just below this swing here, 75.69 for oil. Ideally you'd have it all the way down here, but I mean, you could just have a very tight stop below here. Long somewhere where we are right now, or you're long on a break above today's high with a stop below today's low in here. I think that's a decent setup trade. But it is a little bit random going into the event, obviously. But the chart's telling me it's a positive setup, particularly with that going back to the daily chart, particularly with that big downside rejection. Like hammer pattern, we had 2 days lower at the end of last year, 30th and 31st, then a strong hammer pattern, candlestick pattern, right off the 13-day exponential moving average. And that really, for me, sets us up. It's been a high-level consolidation in here. We're going to put the Fibbo on. Where are we in here? Oh, 1 second. Where are my drawing tools gone? Oh, over here, sorry. If I put the Fibbo on, adjust the rally in here. Why is that not going on for me? Oh, here we go. So you see, look, the market didn't even come anywhere near what it says. So it says the 61.8, but it's the 38.2% retracement here. It didn't even get near the 38.2% retracement. So actually, if I put that on, let me take that off. If I put that on around the other way, a bit more, kind of do it back to front compared to some of my other systems that I have in here. Why is that not going on? I don't think it even makes it to the Fibonacci retracement. So we go from here. here, and you can see actually it just did dip below the 23.6, but only just got below the 23.6 in there, and then a strong rebound back above it. So kind of rejected even a break below the 23.6, and as they came off that 13-day exponential moving average. So this still looks very bullish in here for me going into the day. Okay, I'm going to wrap it up there, guys. I'm going to wish you all a great trading day. I'm going to wish you a great trading year as well. Just a reminder, no webinar tomorrow on Thursday the 5th of January. Wednesday the 5th of January. On Wednesday, no webinar on Wednesday the 5th of January. Returning on Thursday the 6th of January. Stay safe out there, and good luck with your trading today. Take care.